everybody, it's Lawyer Autumn Whit-Boyd here. It is Thursday, April 23rd, and I wanted to just hop on really quickly with an update on our PPP loans. Congress is supposed to be voting today. I have not seen that it has been pushed all the way through the House yet, as of almost 5 o'clock. But what I did see, and what you may have heard about, is that due to the backlash that we have seen in the news about very large corporations, some of them publicly traded, that took PPP loans for small businesses, there are new guidelines that were just issued today by the Treasury Department. So we will get these added to our COVID-19 page on our website. If you look below, we're going to switch, it's right there, awbfirm.com/COVID-19. We will put a link to those up. The Treasury Department had released it's frequently asked questions. It's not new regulations. It's new FAQs. The last ones were released a couple weeks ago. So these, basically, I was hoping they weren't going to make a lot of edits in the document. They just added them to the end. So if you've looked at these before, now you just kind of flip to the end and look at all the new ones. So I'm going to go through a couple of interesting things. The one about big publicly traded companies getting the PPP loans is certainly, I think, the big news point, but there are a couple others that if you are still thinking about applying, or if you have applied and you're waiting to hear, or if you have gotten your money and you're hoping to get it forgiven, if you fit in any of those categories, this will be interesting to you. So, and I've got my glasses on because I'm going to be reading on my other screen. So if you see me looking over here, this is where I've got the PDF. So the first thing I thought was interesting was, and I actually got a question from a friend about this. The way the forgivability works for the PPP loan is you're supposed to use it for an 8-week period to cover your payroll, interest, there's 2 other categories that are, of course, escaping my brain right now. But most of it, 75% or more, has to be used for payroll. So that's the most important ones. So I got a question asking, when does the 8-week period start? And this guidance is very clear. The 8-week period begins on the date the lender makes the first disbursement of the PPP loan to the borrower. So that means when that money hits your bank account, that 8-week clock starts ticking. You've got to start using it for payroll. If you've laid off people, you got to be ready to have them back because you got to be paying them. And another note, the lender has to make the first disbursement no later than 10 days from the day it's approved. So kind of keep that in mind. The lender only has 10 days, and then your clock starts, though, when that money hits your bank account. So that 8-week period is really important if you're wanting to not have to repay those funds back, which is what most of us are hoping. Okay, scrolling down, there was some other stuff for banks. There's some other stuff for larger. There's all kinds of rules about like franchisees, and if you're a small company, you have more than 500 employees, you can still apply if you're in certain categories. I'm going to kind of skip over all of that. For my online business friends, that is not relevant, but just know there are some new things if you fall in those categories. I thought this was interesting. There was a question about whether lenders can use scanned copies of documents since none of us are going into banks. I thought this was pretty clear, but yes, this FAQ says yes, all PPP lenders may accept scanned copies of signed loan applications and other documents, so that's fine. And then this is the real kicker. I'm actually going to read some of this. So the last FAQ says, do businesses owned by large companies with adequate sources of liquidity? So that means, do you have access to cash? Do you have either money in the bank or a giant credit line or banks that are delighted to loan you money? If you fall in any of those categories, can you still apply for a PPP loan? And that is what we saw with a lot of the backlash in the news. Was we had these companies like Ruth's Chris, like some other restaurant chains that had money in the bank, very sufficient to cover 8 weeks of payroll, even if they've been shut down, even if we know that they are taking a hit. When they were able to qualify for and get millions of dollars in PPP money, there was a lot of backlash against that. But the way that the law was written, they were within their rights to apply. It was one of those, well, we're within the letter of the law, but maybe we're not within the spirit of the law. So these guidelines now make very clear, if you have access to liquidity, you should not be applying for a PPP loan. So I'm going to read you the answer. So it says, in addition to reviewing applicable affiliation rules, blah, 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 all borrowers must assess their economic need for a PPP loan under the standard established by the CARES Act and the PPP regulations at the time of application. Although the CARES Act suspends the ordinary requirement, so normally to get an SBA loan, there's a requirement that you must be unable to obtain credit elsewhere. So it's basically, this should be a lender of last resort normally. The CARES Act took that away. So you don't have to be unable to get credit elsewhere, but borrowers still must certify in good faith that their PPP loan request is necessary. Specifically, you have to certify that current economic uncertainty makes this loan request necessary to support the ongoing operations of the applicant. Now, I will say, my lawyer brain, when I read that initially, I thought, most people are probably going to fit in this category. We have economic uncertainty. Who knows what it's going to look like in 3 months? Everybody should be taking this loan. Like, there's no reason not to take this loan. Don't turn down free money. I had that attitude, I will admit. But due to the backlash from these large companies who have plenty of money in the bank, plenty of access to other sources of capital, getting these PPP loans and the money running out, and lots of small businesses who are not easily able to make payroll and have money in the bank or can get other loans, I think that you're going to need to take a second look at this certification. And if your business is really doing just fine, even though there is some uncertainty, even though maybe you could certify this, you may want to kind of take a second look at this and think about this a little more carefully. So it says, borrowers must make this certification in good faith, taking into account their current business activity and their ability to access other sources of liquidity sufficient to support their ongoing operations in a manner that is not significantly detrimental to the business. For example, I love this example. It is unlikely that a public company with substantial market value and access to capital markets will be able to make the required certification in good faith, and such company should be prepared to demonstrate to SBA upon request the basis for its certification. Now, if you're watching this, my guess is you are not a publicly held company. You are probably a very small online business, so you may still be able to make this certification. I still feel comfortable making this for my own PPP application. We have seen a dip in our new client inquiries, which even though it hasn't hit us today, I know will hit us in a month or two. But if you really have plenty of cash in the bank and you're not, actually seeing a problem with your bottom line, you may want to think twice about this. The other thing is the SBA is not requiring that these companies give it back, but they basically are. So the last sentence of this FAQ says, lenders may rely on a borrower certification. So the bank doesn't have to check you, but any borrower that applied for a PPP loan prior to issuance of this guidance and repays the loan in full by May 7 will be deemed by SBA to have made the required certification in good faith. So that means if you are a giant company and you took an SBA PPP loan, you got to pay it back by May 7th. And if you do that, it's kind of like no harm, no foul. We hadn't put out this rule. You were complying with the letter of the law. But now we have kind of changed the letter of the law. And so after issuance of this, if you're applying for round 2 and you're a giant public company, even though you technically fit all the other requirements, if you've got money in the bank or if you've got a big credit line, if you've got plenty of access to capital, you should not be applying for a PPP loan. Save the money for all the rest of us who do not fall in that category. So I hope this was helpful. If you guys have questions, as Congress approves this next, they're calling it a tranche, next tranche of money. I'm sure there will be new questions coming in, so feel free to send me a DM. Let me know. We'll still be doing Facebook Lives like this, just kind of pop-ups, and I'll probably keep doing the Facebook Live show for a bit if there is current questions or things to talk about. So y'all let me know or send us an email. Again, I will give my last plug. Our contract sale is ongoing, so that has nothing to do with PPP. But if you are looking at your business and realizing that your contracts are not doing what they should be, or if you're launching something new, go check those out. 40% off everything. No code needed. You can get there through the link below. Our new website is very easy to shop, kind of from everywhere. So let me know if you have questions about what contract is right for your business, and I hope you have a great rest of your week. Talk to you again soon.